Hey traders, it's about 11:46 New York Stock Exchange time, and this morning actually I wanted to do a little video because it had a good example of dealing with support and resistance and utilizing static and dynamic bars. I'm about to go to lunch. It's been a little slow this morning, but before I go, I'm gonna do this morning recap. Here, this is the E-minis, and this is the NQ. I trade either one of these. This morning, both of these are at a particular area of resistance. As you know, I use static and dynamic bars. The olive bars are static, and the colored bars are dynamic. But when I want to look to see which one to trade, static is usually no real interest into the market, so there's no real movement. Here I only did one trade this morning, but I didn't trade the ES, I traded the NQ, and that's because this is all static bars. So price is telling me that this might not be have high odds of a trade as versus the NQ. Now both of these are by so-called resistance, but the resistance didn't play a factor in determining which instrument I wanted to trade. Here we have interest coming to market. So here we steady have static bars, but yet we steady have interest coming into the market, which enabled for possible more movement. So this showed me that interest came into the market and just maybe more potential for trades. And of course, this is my momentum line right here. So as long as I don't have this line being violated by a dynamic bar, then technically I'm still bullish. Same here, this means I'm bullish. Let me update that. So of course here I'm no longer bullish, I'm bearish, because this momentum is being violated. So as long as I'm below here, I'm bearish. So instead of me having to focus on above support or resistance, I'll just go ahead and I'll utilize whichever way order flow is going, momentum, because regardless of whatever they now or however I calculate support and resistance, it really doesn't matter. I found out the lowest common denominator in dealing with reading price is price action itself. Price can halt at any given area at any given time. Not only that, some people use diagonal support, some use trend lines for support, moving averages. So any of those can be used as support and resistance. Regardless if price wants to break through any of those, it's going to go. If people are buying, it's going to go. If it's selling, it's going to go down. So those can also be used as reference points. These, I'm just giving notes on how I've come to terms in trading without them. All through trading, I want to just be able to see if I can even reduce it. I started off trading with 4 charts, and now it's reduced to basically this chart and a lower time frame, and it just makes things a little more simplistic. So just to note, both of these were at resistance, and this just happened to be a better instrument to trade. Now let me show you the small actually trade recap this morning. As you know, if anybody that followed the videos, my earlier videos, I trade I like to use 3 lots, 1 salary and 2 bonuses when the market allows it. And the reason why I do this allows me to divide it up into 3 separate trades. So each lot is considered a trade. So I'm doing 1 entry with 3 separate trades, so I don't have to worry about how many trades you're getting. It's just maximizing the trade that you have. So this morning here we started, and this was my first lot, which was 4.75 points. Then a point later, it's kind of hard to see on this screen, was my second lot. My first lot is my salary, so I like that to be usually like 2/3 or half to 2/3 of my trading position. And here was my last lot. I managed it, usually my last bonus Evidently this didn't run up, so the bonus got stopped out, but it was still a profit. So second lot 5.75 points, third lot is 5.25 points. So a salary bonus. So that was a total of 15 points or 63 ticks. Now, when I do market recaps, I usually like to show my trades. I don't like to speak on probabilities, but unfortunately, this was a trade that I missed. So it's well, I didn't actually miss it. This trade right here, I didn't take it because my stop would have been bigger than I wanted to. Turned out to be a good trade, so I'm just showing you a trade that I missed. You know, everybody could say things in hindsight once again, because hindsight, you could every trade worked, but this trade I just didn't take it because the stop was bigger than I liked. And so this is this morning, and so basically it's about to go to lunch, and so that was all for this morning. Just want to do a quick morning recap because that was pretty interesting on this is what I try to avoid. Now, can this be traded? Sure. Some people have strategies where they can get in and trade these different things, especially if you would have found a way to get in here and made this move down. But if you would have got in here, then you'd have probably had to get in some of these other moves too. And so depending on your risk management style, could have been stops out or it could have been a profit. But that's it for this morning. If something happens later, if I have time, I'll do another little recap on this evening's video. All right, traders, talk to you later, and good trading.